This is Andrew Stotz of Stotz Investment Research, looking at ultra-low U.S. rates and very high government debt. So, the first thing I want to look at in this chart is the red line. And in the red line, what you can see is that the government collapsed the Fed funds rate down to zero for a decade. Now, it seemed to make sense at the time to do that because the U.S. economy was going through a crisis and the U.S. markets were going through a crisis. And of course, there was all the talk about banks being too big to fail, so you have to take the bad debts off of them, give them really low borrowing rates to keep them alive. The result of that is the yellow line, and that is the government debt. Now, with the government debt, you can see that it went up dramatically after the 2008 crisis as bad debts from banks got transferred onto the government. And over time, the government spent a lot of money bailing out banks and also just dumping money into the economy. Now, the end result of that is that the government debt has now exceeded, for the first time, it has significantly exceeded the GDP. Now, GDP is the blue line, and in the blue line, what you can see is that GDP is a pretty steady measure of the output of goods and services of the overall economy. Now, the point is that if we look at normalization of interest rates, which has to happen at some point, the question is, what's normal? Well, I've looked at a long-term average for short-term rates, and you could say that about 2.7% is normal versus our current 0.5%. Now, that would mean a massive 5 times increase in the interest rate, and that would also mean a massive 5 times increase in the debt burden, the interest burden that the country has to pay. And so the result of that is that you would blow out government spending, and that government spending would then be increased so dramatically just paying interest on the debt. And this is the main constraint that the government is facing at this point. And the reason why, though Yellen is moving interest rates up, there is a constraint, and it's purely coming from this government debt component.